Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Friday, and it's January 18th, and we got a long weekend coming up ahead. So we got Martin Luther King Day on Monday, the 21st. So most likely, I won't see you guys till Tuesday following this recording. So we'll jump into the economic news release scheduled for today. We just got the University of Michigan's consumer sentiment for the month of January. And remember, we got two reports of these. So we had the first reporting at 72.9, and we figured the forecast was for it to continue going upwards, and it kind of declined right here. So people weren't feeling as rosy or as good about the economy as they were previously. So they took a little bit of a step backwards. So we'll jump over to headline news. The stock market is currently down, partly the consumer sentiment, but there's also some data that came out of China recently that there's increased economic growth for China, where their GDP was up a bit for the year. It was like for the year it was like 7.8. They try to keep their forecast about 7.5. So it looks like China's making the soft landing versus a hard landing, as some people were projecting. So it looks like things have slowed down enough where they are probably going to try to keep this pace here about 7.5%. So which they're right on that range or slightly higher. So let's jump over to take a look at the interest rates. That's what we're here for, right? All right. We had this huge drop as we saw yesterday towards, since we had a late broadcast, we saw most of this here. And we did close down below the 104 level at 103.91. But today we're starting off higher, plus we're down only 3 basis points so far this morning. It was down a little bit further. Now we're starting to get a bit of a trend lower here, but we do have some room here. So right now we're at the bottom of this peak and has some room to go upwards. So I do see some improvement in the rates. For short term, we may not reach this level for a little while, as we've been kind of have this downward trend, as we just indicated here. So we may hit certain levels there, but it depends what will come up in the near future, especially with March, with the government digging its heels, the Republicans and Democrats digging in their heels regards to what needs to be spending cuts and such. So we'll kind of wait and see what happens. That next week's gonna be kind of a quiet week for the technical or the fundamentals, which are your economic news releases, but they will have so whatever happens in the news is going to what more or less dictate where the bond and the stock market will happen next week. So pay close attention to that. Obviously Monday's a holiday, so we won't have any reportings on Monday. All right, folks. Well, thanks for stopping by. I'm sorry. We did have an improvement in the interest rates, as we saw. We came all the way down here, so that's about right now about 15 basis point shift, and right now that's an improvement in the interest rates. That's enough for improvement. Anything about 12 or above, it should be more or less an improvement for the interest rates. All right. Have a wonderful weekend. Be safe, and I will see you guys on Tuesday. And if you guys like to receive these on a daily basis, just stop by mikesdailymarketreport.com and subscribe in the upper right-hand corner, and you'll receive these via email. And we don't share your information, nor will we send you anything else but these videos. Have a wonderful day.